reaching new highs, it remains at one of the most undervalued levels relative to gold in history. Notice that we are also approaching a potential major breakout in the copper to gold ratio. Copper has officially entered a price discovery phase, and in my view, this move is still in its early stages. We have the copper and gold price overlaid on top of each other, and they do move together. You can see gold front ran copper, which it did here too, and then oil is going to follow next. Copper to gold ratio, look at that downtrend line ready to break. Oh man, this looks good for copper. Copper sitting on top of its big pattern too. So I mean, this thing, this thing could be it's going to open some eyes perhaps. Silver's looks really good too. I think silver, copper, and oil are about to explode, is what I think. Capital rotation's on track, so we are continuing to see that gold outperforms the Dow Jones. And this one here, yeah, that's gold and Dow Jones. So when it goes down, gold outperforms the Dow Jones. Everything is in alignment for this to occur here, guys. That's when you see copper break this downtrend. It's all interconnected, all of it. Ben Graham says, never buy a stock because it has gone up or sell one because it has gone down. And that's what everybody does. Everyone does that almost. Oh, I don't like this one. Well, why? Oh, it's gone down. Doesn't make the company bad. It could just be out of favor. What makes $3,000 an ounce gold prices look cheap? $4,000 ounce gold prices do. My larger target of $4,000 to $5,000 an ounce upside gold price on this accelerated cycle after hitting 2.1 thousand was wiped out remains in play. Gold and silver stocks are most likely going to finally explode higher. Gold hitting 4,000 is a walk in the park, says Tim Hack. Yeah, this is looking pretty damn good. We'll see what happens. I'm positioned for this. I'm already in it. I've been in this stuff before this chart. You know, the time frame. I'm just riding. I love this stuff. Love it. I love seeing it. Love seeing the breakouts, and I do think the miners are going to take off probably pretty big. One of the few silver charts that matters. Really, silver is broken out on the quarterly, while the gold and silver ratio is still at 86. Is mind blowing. This means we have fuel to run to $107 silver just based on former historical tops, with gold not moving. If gold moves on up and we compress, let's get the good old calculator out, guys. Let's see what that's going to be like. Let's say we compress the ratio down to 30 to be conservative. Let's say gold's at 4,500. We go to 30, $150 an ounce silver. Pretty easy math. Yeah, definitely possible as we break through this gigantic cup and handle pattern. Breaking news from Eric. It says the Chinese government is now officially chasing capital gains tax on all of the profits that Chinese citizens made from investing in U.S. equities. Physical gold and silver will be the only escape door. The door is small and narrow. It's getting worse. So, Warren Buffett, without passion, you don't have energy. Without energy, you have nothing. Todd Combs, the earlier you find your passion, the better, because it won't seem like a chore to follow your dream. And you'll outwork everyone in the process because you like doing it. For freight futures, we've got dry bulk, Capesize up 1%, Panamax down 2%. And then tankers both flat today, VLCC and Suezmax. D.R. Horton just printed its best single-day gain since the great financial crisis. Take a look. Bottom, and maybe a bottom. Are we going to move higher in home builders? I listened to Lennar's earnings conference call. And if you guys want to ask questions during the weekend or something, I can answer whatever you like. But yeah, I'm not that bearish on housing like some of you guys are. Gold soared. Now copper's rising rapidly, and oil is next. It is next. You can see that we've got these, I think they're MACDs here. Let me see that. KST, yeah, maybe it's a strength indicator, but MACD coming up, and this one's bottoming and about to come up here at some point. It says gold moves first, copper leads oil, and oil usually moves last. I was looking for top talent. So Donovan Jackson says silver miners are my favorite setup within the commodity space right now. That's SIL and SILJ. Ready to break out here, looking pretty good. Yeah, they do look good. They do look good. Van Eck Steel ETF, SLX, is on the verge of breaking out of a 14-year base. You know what that means? It says the Trump administration wants a weak dollar. I predict a drop. And this is the chart for the dollar. There's the channel support as we go up. And could we get a break lower? If we do, what does that mean? Every single bull market in commodities had this dollar getting weaker. And money rotates differently when the dollar weakens against other currencies. So if we get that breakout of that channel and we break lower, where each one of these channel breaks were, this one here, so we're not back here, but we had a big bull market in commodities in the 86, 87 region. This one here is the 2002 era. And this one we could be at the beginning of a breakdown here. If it breaks down, well, you're going to see money rotate into commodities, emerging markets, and they are all set up and put in bottoming patterns already for that to occur. What does that mean if we go into emerging markets or whatever? So some of these emerging markets from about this point on to here returned a 20x. The whole damn ETF did. 20 times your money. There are companies that did 100x in that same time frame. Yes, that is how big of a deal this is. But you don't get those returns unless you get in early and you sit and you wait, and you might have to endure some pretty big pullbacks along the way. The same setup is there as the last setup. So what do you think is going to occur? Do you think we're just going to stay in the channel forever? I could debate that we could maybe get a bounce here a little bit, similar to maybe something like this, and then we break, get like a counter trend false move where people get all sorts of confused. Markets tend to do that. But yes, this is a huge opportunity. Everything that I see is in alignment for this to go and break down with time, not immediate. Now, Warren Buffett, if you're even slightly above average investor who spends less than they earn over a lifetime, you cannot help but get rich if you are patient. You can not help but get rich if you're a little bit better than average. Now, if you're way above average, which I hope we are, then we'll compress that time frame. I've compressed it. This is what I've done. I've learned about investing, and I'm getting better with time. I save a lot of money, and then I invest it. And if you're patient enough, it will happen. Here's some real estate guys. We've got Reventure Consulting down here. Well, that's his chart at least. U.S. housing market has reached its most unaffordable level in history. But I like what this is up here. 2014, something's got to give. 15, 16, 17, 18, 19, 20. Panic slam, rates to zero. Best time in 50 years to buy a home. Something's got to give in 21, 22, 23, 24, 25, 26. Do you see a pattern? All of these guys, these housing market bears. I started my channel in 2020. The reason I started it was somebody at work, they were like, they made a comment about not being, they don't want to buy a house because it's going to crash. And I just started laughing. I was like, no, it's not going to crash. There's like no way. The underbuild scenario here is like the worst it's ever been in history in 2020. You've got the largest demographic coming into home buying years.